Welcome to Middle Class Matters Business News in English from Dr. CMA Allegation Hindenburg Research Adani Report on Adani stock manipulation and accounting fraud. The report is read in full. Part number 22 continued. The DRI investigation, which included extensive bank records, invoices, witness testimony, corporate entity records and custom records, calculated that Adani power companies falsified invoices and more than doubled the declared value of imports of power equipment. According to the investigation, the aim of the scheme was indulging in gross overvaluation of imported goods, zero or low duty rated, to siphon off money abroad from public listed companies. Although not explicitly laid out in the DRI report, a secondary motivation for inflating equipment costs would have been to obtain higher energy tariffs set under official guidelines by the Central Electricity Regulation Commission (CERC). CERC documents made it clear that energy tariffs are calculated on a series of components that include a return on the value of investment, including initial capital cost. Ultimately, if the Adani Group inflated cost of either coal imports or equipment cost, the end consumer could pay more for that via higher energy tariffs. Although the imports were shipped directly from China to India, invoices were issued by intermediary entities in Dubai, serpentantly controlled by Vinod Adani, brother of Adani Group chairman Gautam Adani. A schematic of the alleged fraud is reproduced below from the DRI investigation. OEM, actual suppliers, intermediary, the importer. OEMs, SCC, High-Tech, APL, Beijing, Fijian, Longqing, others. Invoices routed through EAE, intermediary, Electrogen Infra FZE EOE, intermediate EAF. Goods shipped directly to India, but inflated invoices received by EAF sent to India to APML or APRL. Source Director of Revenue Intelligence Report. DRI called the Dubai UAE based entity an intermediary dummy agent for invoice copying and value inflation. Scandal 3. Money out. In 2014, DRI investigation found that Vinod Adani's intermediary entity then sent $900 million in siphoned funds to a privately controlled Adani entity in Mauritius. In what would become a pattern, the alleged skimming money found its way into Vinod Adani controlled entities in Mauritius. According to the DRI investigation, investigators estimated that $808 million had been skimmed and that $900 million was subsequently directed out to tax haven Mauritius. Per page 111 page investigation report. This corroborates the modus operandi of the siphoning of money abroad by inflation of value of imported goods by creating an intermediary invoicing agent in the UAE, while actual value of the goods as per the invoice of actual supplier or OEM is remitted by EAF, Adani controlled Electrogen Infra, to the said supplier. The overvalued amount is siphoned off to their own companies in Mauritius or elsewhere. 12.2. It appears from the above table that an amount of nearly $900 million have been transferred by EAF from its account in Bank of Baroda to the account of its parent company, Messrs. Electrogen Infra Holdings Private Limited, Mauritius, during the years 2011 to 2013. The quantum of overvaluation in respect of supplies to APML and APRL is estimated at US dollars 808,339,055 over US dollar 808 million. Refer table 23. This corroborates the modus operandi of the siphoning off of money abroad by inflation of value of imported goods by creating an intermediary invoicing agent in the UAE, while actual value of the goods as per the invoice of actual supplier or OEM is remitted by EIF to the said supplier. The overvalued amount is siphoned off to their own companies in Mauritius or elsewhere. So, show cause notice of DRI. Scandal 3. Investigation stonewalled. The power equipment over invoicing investigation was shelved by the same agency that launched it, overturning its own evidence. This probe has been shelved. This has been done under pressure from the government, opposition member of Congress. Despite the overwhelming evidence, the investigation was shelved by one of the DRI's own senior officials 3 years later in August 2017 order. The ruling overturned the organization's own evidence assembled during the original investigation and stated that there was no proof the power equipment had been overvalued. The ruling also stated that the deal between the Adani power companies and Vinod Adani, despite being related parties, were somehow conducted at arm's length. Even though I find that EIF, Electrogen, and APRL, Adani Power Rajasthan, to be related entities through Sri Vinod Shantilal Adani at Vinod Shantilal Shah, I have come to the conclusion that the said relation has not affected the price and that the same was at arm's length, and have accepted the transaction value. Thus, I find that the allegation that the impinged goods were overvalued does not hold water. Proceedings against all the accused were dropped in what amounted to an internal squabble. A different department of the DRI launched an appeal against that ruling. The appeals tribunal, CSAT, appealed the decision to drop the charges in a ruling in July 2022. Such rulings have led to the accusations from the opposition leaders in India's Congress that the ruling party was protecting Adani companies from prosecution. As senior Congress member Jairam Ramesh said, wherever Adani is investigated, this government shows an alarming alacrity to terminate the probe. The first probe conducted by the DRI gave a notice to Adani regarding the import of power equipment. This probe has now been shelved. This has been done under pressure from the government. Scandal 4. Money in. Adani Group's involvement in an alleged INR 290 billion, that is US dollar 4.4 billion, scam to over-invoice Indonesian coal imports, passing cost off to taxpayers. Period under investigation 2011 to 2016. Another investigation by the DRI revealed in 2016 March alleged that 40 companies, including 5 Adani Group entities and another 5 suppliers by Adani Group, were artificially inflating coal value as compared to the actual value. List of 40 importers of coal under investigation by DRI. Serial number 1 to 5. Name of the importer. Adani Group Companies, Adani Enterprises Limited, Adani Power Limited, Adani Power Rajasthan Limited, Adani Power Maharashtra Limited, Adani Wilmar Limited. Serial number 6. Supplier Adani MBG Commodities Private Limited, Tamil Nadu Electricity Board and Knowledge Infrastructure Systems Private Limited. 7. Jhinghar Power Limited, Supplier Adani. 8. Vyom Trade Link Adani Group. 9. Gujarat State Electricity Corporation Limited, Supplier Adani. 10. Haryana Power Generation Corporation Limited, Supplier Adani. General Alert Circular Source, Director General of Revenue Intelligence. As per the report, the objective of the overvaluation appears to be twofold. 1. Siphoning of money abroad, and 2. to avail higher power tariff compensation based on artificially inflated cost. Media reports indicated at least 1,300 Adani Group coal consignments were being investigated by authorities. The Guardian, Adani Group, the Adani being investigated for alleged involvement in $4.4 billion coal pricing scandal. Joshua Robertson, Guardian, the DRA alleged the cases under examination suggest huge overvaluation to the extent of about 50% to 100%. The DRA also alleged that laboratory test reports were falsified in order to show the coal was of higher quality than reality. Media reports indicated that coal imports by the suppliers under investigation may have exceeded INR 290 billion, $4.43 billion at 2015-16 exchange rates. Those figures may not have considered the value of higher electricity tariffs paid to some suppliers, including the Adani Group, leading to a local commentator to suggest the figure might be INR 500 billion, $7.63 billion. Please like the video, give your comments, subscribe to the channel. Please share as much as possible as an informative video, and thanks for watching.